Correct.
I've heard you say you're never going to sell your Bitcoin. So when is there any situation that you would find yourself in that you're like, you know what, I'll sell some, or are you like planning to leave it as an inheritance for your family, things like that?
So let me explain on that. Why would you ever sell an asset in an inflationary environment if it's being priced in fiat currency, which is collapsing in value? For example, if I told you that the dollar is going to be printed and it's going to be debased 10% a year, and if you owned a house and it was a desirable house and you wanted to live there the rest of your life, why would you ever sell the house? Because you know it's going up in price 10% a year. And if the interest rate is 3%, you would just hold the house the rest of your life and just refinance the house. And when you need more money, you would borrow against the house because the house is going up. If you owned a football team and I printed 10% more money, the value of the football team would go up. You're not going to sell the football team. You're going to hold it. And if you need money, you're going to borrow against it. Selling a good asset normally is always a mistake. But Warren Buffett's never sold his assets. He held them forever. John Malone held his assets. Pretty much every billionaire that you know of for the past 100 years, they got that way by never selling anything, right? So the trick is you have to find an asset which is not going to be impaired, right? The reason to sell something is not because you need money. The reason to sell something is because the asset is impaired. And by impaired, I mean like sell the football team because you know no one will ever watch football ever again. Or sell the ranch in California because you know that they're going to pass a 5% a year property tax on California and you need to leave California and no one's going to want to ever go to that ranch. And sell it because it's impaired. If it's not impaired, then then as fiat gets printed, the asset is going to go up in value if it's a high quality asset. And if you were to sell it, you would get hit with a capital gains tax, either long term or short term, right?
Yep.
Capital gains tax is likely to go up next year, right? I mean, it's 25 to 50%, depending on where you're living.
Sure.
So, so you sell something, you're going to pay half of it to the federal government or the state government. You keep the other half, and then you're going to lose the appreciation on the asset. If Bitcoin was going up 20% a year, right, and you sold it, you would lose a 20% return every year for a decade, right? That means selling $1 million of Bitcoin will cost you $10 million in 10 years. So you lose the capital appreciation, you pay the tax,
right.
You get $500,000 to spend. Why wouldn't you just borrow $500,000?
So you're saying borrow against your Bitcoin holdings is in a way to earn? Okay, so like kind of like BlockFi. I use BlockFi, lend and earn interest on my Bitcoin and other cryptos. In that type of scenario.
Let me make a big point, right?
Yeah.
If the asset is appreciating faster in value than the rate at which your expenses are going up yearly, you can borrow against it forever and your debt to equity ratio will fall. You see, like if I had $1 million of Bitcoin and I borrowed 100,000 against it, my debt to equity ratio would be 10%. Maybe I pay 5% interest. Maybe I pay obscene interest, 10% interest. It cost me 110,000 instead of 100,000. Okay, well, Bitcoin's going up. Fill in the number. What do you want to fill in? 20%? It's going up 200%, right? If it was going up 100%, by the way, your 1 million becomes 2 million. Next year you have 2 million. You borrow another 100,000. Now you've got $200,000 in debt outstanding. You've got, $30,000 in accumulated interest. You've got $230,000 against $2 million. Your debt to equity ratio is no worse. The next year it doubles again. And Now you've got 4 million against 300,000 in debt. Your debt to equity ratio falls. The next year it doubles again. Now you got 500,000 in debt against 8 million. Your debt to equity ratio falls to 6%. Your debt to equity ratio will fall exponentially to zero, right? I mean, well, not to zero, but to a low number. So So if you actually wanted to accumulate wealth, the number one thing you got to do is you have to acquire high quality assets that will not be impaired.
Sure.
The number two thing you have to do is you have to have a relationship with banks that will advance you money, cash, fiat, euros, dollars that you have to spend against those assets. That's the second thing. But the first thing, well, now let's come back to Bitcoin. Well, what's the highest quality asset on Earth? What's the best property you could possibly have? A city block in Manhattan? Not anymore.
Right.
It used to be a city block in Manhattan when everybody in the world went to New York City. But you can't move a city block. What if I gave you all of Park Avenue in cyberspace, and I told you that 1 billion people are going to live there one day, and they'll live there for 1,000 years? What if 10 billion people want to live in cyberspace for 1,000 years, and you could actually own 1% of the city, or 0.1% of the city? Why would you ever sell it?
Right.
Right. I mean, the point is, they're not making any more of it. Bitcoin is Manhattan in cyberspace. It's 21 million city blocks. You can buy a block. Okay? It's better than buying all of LA, because you can't move LA out of California. You can't move it out of the US. It's better than buying 10% of Apple, because Apple might print twice as many shares and then you only have 5% of Apple. It's better than owning a bunch of gold, because gold miners are going to produce twice as much gold.
Yep.
Okay, it's better than owning bonds and cash. So tell me, what on earth is better than owning the Jets or a football team? People might not be watching football in 1,000 years.
Right.
By the way, there's nobody in the stands this year watching football, right?
Yep.
So find an asset. It's probably better than owning the Mona Lisa or owning a Michelangelo or something like that. I mean, although those are scarce.
Right, it's scarce.
You can't be guaranteed that everybody's going to want to have classical art. But will everybody want money? Monetary energy? Like, monetary energy is the ultimate property. I have pure, encrypted, tokenized monetary energy, and I can own 1/21 millionth of all the monetary energy there's ever going to be for people on the monetary network, which is the dominant monetary network. So you buy fill in the number, you buy it and it's going up 100% a year, right?
Mm-hmm.
You have $1 million and you sell it, so you have $500,000 you can spend, or you don't sell it and it goes to 2 million, 4 million, 8 million, 16 million, 32 million, 64 million, 128 million, 256 million, 512 million, $1 billion, right? Okay, so a millionaire becomes a billionaire by not selling over 10 years. And let's say you wanted to spend $500,000 a year, borrow $500,000 a year, and after 10 years, you will owe $5 million out of $1 billion. Your debt to equity, including interest, is less than 1%. 1% of your Bitcoin would be debt. Now you tell me, you think it's a wise thing to sell the $1 million? It's going to cost you $999 million to sell the million. You think it's less risky? I mean, and I think the answer is, I think people, they're not realizing that they can borrow against it. They should go and, the single most important thing you can do is develop relationships with bankers that will loan you money against your assets. And then, in terms of, Tony, like what would I borrow against? Well, first you borrow against fixed assets, like borrow against your house, because it's not marked to market. It's not going to trade down by 50% in a morning, right? Mm-hmm. So I joke, mortgage your house, buy Bitcoin. But the truth is, before I sold Bitcoin, I would mortgage my house. Sure. Because I can get a 30-year mortgage with a fixed interest rate, and the house is probably going to go up in value over the 30 years because the banker's going to print more money. So why don't you borrow against a fixed asset? If I can't borrow against a house, I borrow against my car. I started MicroStrategy. I took a furniture loan. I borrowed money for furniture. I didn't buy the furniture, by the way. It was just an excuse to get an unsecured loan. But you borrow against something like that is not going to trade down rapidly. Like, I am not, for example, I would not tell anybody go buy Bitcoin on 10-to-1 margin. Like that's stupid. Like, don't go buy $1 million of Bitcoin with 100,000 of collateral, because if it trades down 10%, you're going to get forced liquidated and wiped out and lose your 100,000. I would say a better idea would be buy 100,000 of Bitcoin with 100,000 in collateral. And when it goes up by a factor of 3 or 4, you can borrow 50,000 against it. Your debt to equity ratio would be 20%. If it doubles the next year, your debt to equity ratio will be 10%. If it doubles again, your debt to equity ratio will be 5%. If it doesn't go up by a factor of 100%, if it goes up by 10%, as long as it's appreciating faster than your rate of interest, and interest rates are low, it's kind of a non-issue. And
sure.
And you have to adjust your expenditures, right, to keep them in line. So common sense is, keep your debt to equity ratio at 10, 20, 30% of your assets, and then hold on to high quality assets. There is no one that ever got rich, in my opinion, nearly no one, that didn't buy an asset
right
and let it appreciate tax-free over time. It's
sure.
the taxes that kill you, right? The capital gain tax, the income tax, etc. And you really, when you borrow against assets, you're actually living on liability. So
right.
instead of making $500,000 a year and then paying $250,000 a year in taxes, wouldn't it be a lot smarter to borrow $250,000 a year and let the money appreciate tax-free for the next 20 years of your life? That way you pay no tax, and you've still got an asset that's working for you, so you win both ways. You just have to manage your debt exposure, and you have to be intelligent about, are you marking the asset to market? And if you're marking it to market, you need to be very conservative about your debt to equity ratio, as opposed to, are you taking an asset against a loan against a fixed asset, which isn't going to be marked to market. It's just a term loan.
So Michael, I know you have a few more minutes because you mentioned you had to hop off at a certain time. 2 quick questions before we wrap it up.
Yeah.
Is MicroStrategy planning to get into any Bitcoin mining? We're seeing a Bitcoin mining movement in the United States. Anything there that you're planning to do?
I think it's important that the Bitcoin mining industry grow everywhere in the world, and especially in the U.S. I'm a big fan of that, and I like it. I think that the people that should be in Bitcoin mining, they need to have proprietary assets, either in energy